Well, I enjoyed the comments by Mr. Miranda. I didn't know I'd be coming after a fellow Georgian and Mr. Duvall, so it's been a kind of a Georgia-centric a little bit here for a moment. But I do want to echo some of his statements as far as working with landowners. My family, as was stated in my introduction, owns a farm in Georgia. We have timber, and myself and others at the Risk Management Agency grew up on farms, so we know how it is to be on the other side of issues. And also, I'd like to thank the state of Arkansas. I got my education here at the University of Arkansas Law School, got a master's degree in ag law, which led me to the USDA, so I'm thankful for that. Without that, I would not have had the opportunities I have now. And most importantly, my wife is from Arkansas. She's from Little Rock, so I owe a lot to the state of Arkansas, the Farm Bureau as well. So with that, we'll get started. I'm going to give a kind of an overview of the crop insurance program, a little history. Then we'll move into the status of the program, where we are nationwide. We'll move into Farm Bill implementation. We're pretty much done implementing the Farm Bill. I'll give you an update there and provide a few facts about where we are with some new policies in Arkansas, specifically rice. And we'll end with a few initiatives we're working at RMA. So let's get started. So crop insurance started in 1938. When it first started, and pretty much until 1980, it was very limited, mainly wheat, a few major growing areas, Midwest. It wasn't something that was highly utilized throughout the country. That started to change in 1980 when Congress changed the way crop insurance is administered. Before, it was all administered straight by the USDA. Now we work with private companies. They sell and service the policies. The federal government backs the losses, pays premium subsidies, etc. But it's a private-public partnership. And since then, participation started to increase. More crops became eligible. And what I wanted to highlight here is market penetration. We had a study that came out a few years ago, and we update it every year. In fact, we're going to update it, I think, this year to have more current statistics. But I just wanted to highlight, if you go back to 1990, even the major crops had fairly low participation. And if you look at penetration, what we take is Natural Agricultural Statistics Service data and compare that to our RMA data to see what percentage of acres are covered. If you look at in 1990, only 38% of even the major crops, corn, rice, soybeans, cotton, only 38% had coverage. If you move to 2014, we're at 85%. A lot of that goes, as I said, to legislation that was passed. Congress passed new legislation. The commodity groups, Farm Bureau, stepped up and told the agency the new products they wanted. So, and that can contribute to the higher participation. But one thing I kind of wanted to highlight here is, while we've made some progress on principal crops and we still focus on those, we want to make sure that policies work for the major crops. But at the same time, the Farm Bill gave about $6 billion extra when other programs are being cut, which means Congress has a lot of faith in the crop insurance program. And if that's the case, then it needs to work for all producers. And if you look at vegetables, we were at 16% in 1990, and we're at 36% in 2014. So we've been trying to go out and find what we can do to improve crop insurance for all producers, specifically vegetable growers. We have a new whole farm revenue protection policy, which I'll talk about later, and even organics. We've greatly expanded the options there to make it a safety net that truly works for everyone. And just a snapshot here of market penetration in Arkansas. The major crops, well over 70% participation, and the new study will be updated later, but as of 2012, even buy-up coverage was increasing in Arkansas. To go back to that, you can get a catastrophic policy, which just covers, it's basic insurance coverage. It's free, except you pay an administrative fee of $300. And so producers are actually buying up. They're getting 65%, 70% coverage in Arkansas, more than they have in the past. And as we look at nationwide, just what we cover, I think if I were to ask you, what do you think the crop insurance covers, where all our liabilities are, you probably would say corn and soybeans, just if you look at American agriculture, and that is the case here. In Arkansas, again, if I was to ask in Arkansas, what do you think the major liabilities are? Rice and soybeans, corn and cotton. And this is a look at historical, the last 15 years, what is crop insurance paid? Drought has been the major cause of loss the past 15 years. I don't think that would probably surprise anyone on a nationwide basis, followed by precipitation, flood, or storms. And to go back to this drought, I think one of the examples that highlights how effective the crop insurance program is in 2012, the historic drought. It was a terrible situation. We ended up paying about $18 billion in losses. It wasn't a good situation for anyone, but crop insurance worked the way it was supposed to. Claims were paid in a timely manner. We got very few complaints. You didn't see a whole lot of articles about farmer bankruptcies like you did in the 80s. And so thankfully the crop insurance program was there to help out. And if you look at Arkansas, it's a little different the past 15 years. Excess moisture, storms, and flooding, they've been the major causes of losses in Arkansas the last 15 years. And just last year, actually nationwide, excess moisture was the leading cause of loss in the country. Same case with Arkansas, it's at about 83%. The vast majority of the losses were from excess moisture, flood, and storms. And last year, there was about $154 million paid out in crop insurance claims in Arkansas. Rice, the biggest one, followed by corn and soybeans. And this chart I just wanted to show you, by law, crop insurance has to be actuarially sound, generally meaning premiums come in, payments go out. It should be about even over time. So this chart just shows the last 20 years, and on nationwide, we're about a 0.88 ratio, which means we've paid out, for every dollar paid in, about 88 cents were paid out. Now, usually 1-to-1 is what would be called pure, but we do have to have a reasonable reserve to have a little room for error there. And like any crop insurance, and like any insurance program, you're going to have high years and low yield years. So hopefully in the end it evens out. Obviously 2012 was one of the biggest years ever for crop insurance. In Arkansas, as you can see, the last 20 years, there haven't been as many bad years as it compared to nationwide. In fact, if you look at last year, is the highest paying year in 20 years. So now let's move into 2014 Farm Bill implementation. We'll talk about beginning farm and rancher provisions, organics, whole farm revenue program, actual production, yield exclusion, supplemental coverage option, and stacked income protection for cotton. Beginning farmer and rancher provision, it's a provision that I hope if you're a young farmer, you have family or friends that just start out farming, I hope, and they didn't take advantage of this, I would hope they would talk to their crop insurance agent to learn more about it. Generally, most importantly, is if you qualify, which is 5 years of less of farming experience, you get a 10% premium discount. So if, we normally give 62% on average of premium subsidy. If you qualify, you get 72%. So it's a pretty significant discount. And secondly, you get, and let's say you worked on a farm, you're employed, and you help manage the farm. If you go and farm yourself, instead of starting all over with your yield history, you can take that yield history from the previous farm. And that gives you a higher guarantee starting off. So if you're beginning, you don't start from zero. And then also another provision allows you, if there was a really bad year, normally we would plug your yield in your history with 60% of the county average. if you qualify for beginning farmer, you get 80% of the average. So it just kind of helps beginning farmers start out in a better situation than they would have. And we've had about almost 14,000 producers nationwide take advantage of this, and it's saved almost $14 million nationwide. It covers almost 4 million acres. And just for Arkansas, we had 110, saved about 220,000. And obviously, if there are low numbers of beginning farmers, then this number wouldn't be high. But I just hope if people aren't taking advantage of it, it's there. I would talk to their crop insurance agent if they think they're eligible. And in the darker color here, this illustrates participation nationwide. Obviously, we had our highest participation in the upper Midwest, in West Texas. And as I talked about earlier, we want to make the safety net work for everyone, and just organic producers are part of the agriculture community. So one thing we've done is, and generally a price selection is what RMA established prices for if you want to insure your crop. And we have separate price elections for organic crops. So generally those are higher valued. We had 4, we had 0 in 2009, 4 in 2011, now we have 57. So organic producers, when they buy a policy, they can guarantee it at the organic price. Similarly, contract price option, if they have a contract for their crop, they can insure at that contract price rather than what RMA says the price is. That's available for 73 crops. Another thing, whole farm revenue protection. This came out last year. This is the first year for Arkansas. And I just looked, and obviously all the data is not in, so there were about 9 policies sold in Arkansas. This is a little bit different in that instead of buying your corn, your soybean, your strawberry policy, whatever you grow individually, you just insure the entire revenue on your farm. So, this was designed to pick up groups that are highly diversified, that, if they only grow a 1/4 acre of squash or, an acre of watermelons, et cetera, it may not make sense to buy a policy, or we may not even have a policy available, but under this policy, they can buy a policy and insure the revenue. And it's nationwide, every county in the United States, the first time ever for crop insurance that is offered in every county in the United States. And what we did when we rolled this out, we spent all year, our team, going across the country, talking to the folks who bought the policy to decide what do we need to change to make sure this can work. And this one thing we changed was there was quite a bit of paperwork requirements. We talked with them and provided some flexibility. If you're selling direct marketing, you can we adjusted the way that can be reported to reflect how you sell your crops. There was a limitation in there if you had livestock. This policy does cover livestock. If you had more than 35% of your operation, you couldn't get the policy. Now that's been removed, although it's capped at 1 million. And then, this is all based on your Schedule F. So, and you had to have 5 years of history. So that removed a lot of beginning farmers, and we worked to provide some flexibility in certain cases where if you had 3 years, you could qualify. So actual production history yield exclusion, this was a big provision in the Farm Bill. I don't know how much you follow this kind of after the Farm Bill was passed and implementation. But essentially what this does is if the production in a county is 50% below the 10-year average, then a producer can exclude that yield from their production history. So with the idea, if this was a really bad year, and if it's 50% below the 10-year average, it is a bad year, you can exclude the yield. It's an option. When you talk to your agent, you have to go in and actually exclude it, and you pay for the additional premium. And we started out with about 11 crops in 2015, and now this is the entire crops that are eligible. The bolded crops are available in Arkansas. And this next slide, I just wanted to highlight, there were mixed participation across the country. Arkansas had a pretty low participation in this, and there may be various reasons. Each producer is different. For some, it may just not be worth the extra premium you pay. But this is nationwide, and as you can see, the far right column, that percentage is what your yield was increased by those who selected this product. So if you look at cotton, 22% on average was the increase in yield that selected this option. Rice didn't have that big of an impact, but a lot of them got 7 or 8. So I know the sales period's closed in Arkansas, but next year it'd be worth it just to sit down with your agent and go over this option and crunch the numbers and see if it works for you. And this is participation nationwide, and the darker the color, the higher the participation. And supplemental coverage option, another new Farm Bill provision, and it's the policy that supplements your underlying coverage. It's based on area losses. It's got if 86%, below 86% losses in the area, then it's triggered. It has a 65% premium rate, premium subsidy. So we started with 8 in 2015, and now this is the entire list for 2016. We were able to greatly expand, and the bolded crops are the ones available in Arkansas. And I will say that Arkansas rice had about 26% participation, which is probably one of the highest in the country. And this shows the participation by number of acres for supplemental coverage option across the country. Darker the color, the higher the participation. And just one thing I wanted to highlight, the Farm Bill, and while we were able to do a lot of expansions, the Farm Bill allowed us to use RMA data. Beforehand on these area policies, we use NAS data, National Ag Statistics Service data. And we were able to go in with this new data using our own data, expand. And just for Arkansas, we were able to expand 81 crop counties. And when I say that, if County X got wheat, irrigated wheat, that's 1. Non-irrigated, that's 2. So we were able to expand in Arkansas, but nationwide, just using RMA data, we were able to expand 9,500 county crop programs. So that's a pretty significant expansion. And this is just an example. I know rice isn't up here, but this is just to illustrate. The blue is what we had initially, and the green is how we were able to expand with the new data for wheat and corn. And stacked income protection plan for cotton, that was an area-based plan. In the Farm Bill, revenue-based plan, unlike supplemental coverage option, you didn't have to buy an underlying policy. You could buy a stacks policy itself. Participation in Arkansas was on par with what it was nationwide, about 25%. And this another illustration of participation. We had, the participation was the highest out in West Texas, Southwest Georgia. And I wanted to highlight, I worked in from Georgia, and I worked in the peanut program when I first got to USDA. And when I got to USDA, I started reading about peanut production in Arkansas, which I found really interesting. Glad that it's expanded out here. And the Farm Bill did require us to start offering a peanut revenue program policy. And we had 38 sold last year in Arkansas. So typically historically with peanuts, you could only insure your yield. Now you're able to insure the revenue part as well. And new rice policies in Arkansas. We have 3 new options for rice producers. The Federal Crop Insurance Act allows entities to come in and make a recommendation to the risk management agency. It's called the 508H private submission process. They go in and they collect data and they meet with our board of directors. It can, usually about a year, it can take longer. And they go in and propose a policy. And if the board approves it, then risk management agency implements it. And these are examples of that process. Margin protection is just out this year. It's available for Arkansas rice. It covers your margins. Sprinkler irrigated rice endorsements. Rather than flood irrigated, you can ensure this type of practice. And hybrid seed is available this year as well for those who grow rice for seed stock. So these are all three options that are new for rice in Arkansas that came about because a grower group or a university had an idea. They submitted it to RMA, and the board approved it. So these are available. And another initiative that is a priority of Secretary and the deputy secretary as well, and those of us at the Risk Management Agency and the Farm Service Agency, is to make your experience with USDA as streamlined as possible. There are so many agencies at USDA, and if you're a farmer, you probably deal with FSA, NRCS, RMA, a host. So the Acreage Crop Streamlining Initiative is an effort. So at least when you file your acreage report, you can file it with either Farm Service Agency or your crop insurance agent. So you don't have to file it twice, the same information twice. We had a pilot that was out in Iowa and Illinois in spring of last year, limited counties. We expanded that in the fall, and Arkansas was included in the pilot. And this year, it is nationwide, and rice and sorghum, soybeans, corn, cotton will be available for this pilot. And if your crop insurance company, which most are participating now in this pilot, if they're participating, you should be able to talk to your agent about this, and you go through the process and see how it works. We got a lot of feedback. Obviously, with any new initiative, there are going to be things to work out, but we got a lot of good information last year of how this is implemented. So hopefully this will go as smooth as possible, and we can keep fine-tuning it to help make things more efficient. And then finally, I think the crop insurance program, it's a lot easier for groups like Farm Bureau and other commodity groups to go on Capitol Hill or other areas to advocate for crop insurance if it's perceived in the public and the eyes of the taxpayers to be doesn't have significant fraud, waste, and abuse. So an initiative at RMA has been to look at what we're doing as far as fraud, waste, and abuse, and address the big issues, so we don't spend our time on things that aren't significant. We've had our contractor to come in and look at our compliance activities to see where we're spending our time. But today, we worked with Office of Management Budget, our Office of Inspector General, to calculate a new error rate. And this year it's at 2.2%. It's the lowest it's been in a while. It's below the USD average. It's below the government-wide average. So our goal is to make sure that we're good stewards of the taxpayers' money, and a program that producers can be proud of. And here's my contact information. To echo Mr. Miranda's comments, feel free to reach out to me. Roderick Bell is in the Jackson office. He covers Arkansas. I think it's really important, through the years, as I talked about expansion, a lot of, that didn't just happen because it just organically happened. Some, producer group or producers in an area had an idea. There was a issue that needed to be solved, and, they worked together to solve it. Obviously Congress has had a great role in this. They pass the laws that give us authority to do things, so thanks to them. But it is a team effort, and I would say if there's a policy that's not working for you, contact me or Rod, and we'll see if there's any flexibility, if there's anything we can do in the future going forward, because we want it to work. If this is going to be the safety net of the future, then it needs to work for all producers. And I just ask for us to store it together if there are problems, and we'll try to get together and solve them. So that's all I have. I guess questions? Yeah.
I noticed, and I got here a little late, did you mention anything about any animal agriculture?
No, that's you're talking about poultry? Yeah. That is a good question. The Farm Bill, as you know, required the Risk Management Agency to contract to conduct a study on swine and poultry. For poultry specifically, catastrophic disease, business interruption due to integrator bankruptcy. And the contractor went out in the countryside, collected data, talked with all kinds of folks, and submitted a report to us. And the report, it's online. Feel free to read it. But essentially, the report highlighted two issues in that you have, for us to insure, you have to have an insurable interest. And a lot of the industry, the animals are owned by the integrator. Secondly, and probably the most important thing, is under the Federal Crop Insurance Act, we're limited to $20 million to pay. So that's a big limitation in livestock. If we're going to do anything, that limitation would need to be removed. I will say that just because we took comments on this report, just because the study's out and we've received comments, that does not mean that that's the end of the game at all. We continue to look at different options, what we can do within our legal authority, and we continue to get comments from people all over the country. So it's not, I'm not going to tell you it's going to be easy or there aren't significant hurdles, but it's not the end of the road. We're still looking at various options.
As a poultry producer, we're kind of hanging out with nothing, no safety net at all. We have a lot of money involved, when we raise these animals. I know we get 6 or 7 flocks a year, but we've got a lot of money tied up. If we lose the flock, we'll never recover. And there's a lot of safety nets out for different parts of agriculture, but nothing for poultry. We're kind of looking for something down the line.
Okay, and we definitely understand the issues, and we're looking at different options, but it'll be, like I said, the two legal impediments are significant at this point in time. So we'll be glad to work with the stakeholders and Congress to see what we need to do to, because we understand that poultry producers and other livestock producers, they're in need. So we'll work to address that.
Can those livestock producers be included in the whole farm?
They can. That's a good question. So the whole farm revenue protection, it does cover livestock, but the limitation there is that if it's over $1 million, we can't cover it. So that's something we're currently looking at. So that is a limitation. Obviously, if you have a big livestock operation, $1 million may not get you where you need to be in liability.
What about labor issues or concerns or lack of labor on the whole farm? Will that be covered?
Well, no, it will not, because under the legal authority we have, we can only cover natural causes of loss. So we wouldn't be able to cover labor shortages or something that's not considered a natural cause of loss.
With the fact that we don't own the chickens, preclude us from using the whole farm, or would that be allowed?
That would be a limitation as well, because you have to have an insurable interest in the crop to get a crop insurance policy. You can have just one commodity, but I can follow up later. It does get a little, the amount of commodities matter in the sense of the premium subsidy you receive. So if you have, more commodities, then you're more diversified. So the agency looks at that and says, your risk is lower, so you would have a lower rate and a higher premium subsidy. So, you could have, there is a limitation, I think, for potatoes in the upper Midwest, or maybe potatoes in general, but that's the only thing I'm aware of where you would have to have more than one. But it would just be a matter of what you pay for the policy.
On the whole farm, I'm a contract poultry producer. I don't own those birds, but I have income, and that's what you're insuring is the whole farm income. So I don't know why we're excluded from that, because that's an income for us.
Yeah, I understand the point. I think it goes back to you're getting, it goes back to the animal or the crop, the insurable interest there. So, those discussions we're having those discussions, but.
Grain farmers don't own their grain because they can't retain that grain and replant it. The company that they buy it from owns the grain.
So that's no different than us not owning the bird.
So if
You can't retain your seed, your grain and replant it. It's considered somebody that company's grain, Monsanto or whoever.
well, I think you sell the grain, for production.
You sell
Yeah.
your chickens too. You get so much a pound out of them, you get so much a pound out of your grain too.
Yeah, I agree. It's an interesting, but I really do think the issue is, with grain, whereas you do sell the grain, you own the grain when you sell it. I understand you can't keep, you just don't own the technology. I mean, that's a different issue, is keeping the seeds, but you do, you do own the grain when you sell it. You just can't keep it because of the technology. And I think the distinction with chickens, poultry is that, you don't actually own the birds. You get paid to raise the birds. So, but I'm just saying, under current program, that's the limitation. So we'd be glad to continue to look and work it with who we need to work with to move forward.